Hi, and welcome back to the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc. Today, we're happy to welcome Ali, founding partner at 212, a venture capital firm that backs B2B tech startups with $85 million of committed capital and $170 million in assets under management. This year, 212 are launching their Fund 3, aiming for $70 million in size. If you enjoy our content, do support us by hitting the follow button, giving us a review, and following the European VC on LinkedIn.
Ali, welcome to the European VC. It's super nice to have you here today. How is everything?
Great. Thank you for having me.
So, Ali, I like to start with the good old question. How did you get into venture? And give us the background story. We love this world, but people get into it in very weird ways. Give us yours.
I used to be a banker back in the day in New York, London, some short stint in Singapore and Mumbai. I moved back to Turkey, my home country, in 2009. I did some consulting in 2010 as some friends were establishing the first angel network of Turkey, Galata Business Angels. This weird guy sat next to me. He just arrived from New York, Numan. And we said, let's do something together because we noticed that we were both unemployable in Turkey. And we said, what to do. After many iterations, we said, let's launch a VC fund together. Why? Because there wasn't one in Turkey. So this is year 2011. Then we launched 212 because we noticed the lack of venture capital funding in Turkey. And that's how 212 came about. We started fundraising in 2011, had our first closing end of 2011, started investing in 2012, and our first fund was $30 million. That's how we became venture capital investors.
So let me take a stab at guessing the origin of the name. You started investing in 2012 and your name is 212. Is that why?
Wrong.
Fuck. Give us the story, Ali.
Anyone else? Come on, it's much simpler than that, actually. 212 is the telephone code for Istanbul and New York. So both Numan and I were born and raised in Istanbul and had a significant part of our professional life in New York. And we wanted to find a cool name that wasn't taken and that would come as high as possible in any listing, right? When you stored it. So that's why we called it 212.
I like that story. That's a good one.
By the way, even in Turkey, they ask you this question. They say, "Oh, is it because of New York?" And I remind them that Istanbul's telephone could also still start with 212. So it's Istanbul and New York, actually.
And tell me a bit about how did you guys come to first get to know each other? You had known each other for a long time, but also you said you ended up doing the fund because there wasn't really one at the time.
There wasn't one. And again, I moved back in 2009 and Numan had just moved back his family in 2010 from New York. I had a banking background, don't be fooled by the beard and everything. I tried to be a banker for most of my career. And Numan had spent most of his career in banks as well, but he wasn't a banker. He was actually part of the technology management. Recently, Goldman Sachs, actually, he was in, Asia and then in New York. It was kind of hard for us to do something else in Turkey, like, salary-wise, return-wise, and expectations and the type of environment that we were looking for. And as we were part of this angel group, we noticed how much money was not being invested in Turkey. And there was no other VC to fill the gap. And we said, we have the background. We think we know what we're doing. He knows technology. I know investing in technology. First, we said, we should just launch an accelerator, that would be the right solution. And we started looking for garages, actually, because we said, in the US, they usually, have garages, and that's where the, entrepreneurs come up. We actually started looking for garages in Turkey, commercial garages. And we found one, actually. And we almost got suffocated in there because of all the exhaust, I remember. And then we said, this might not be the right solution because they don't actually need the space. They need the actual money. Mm-hmm. And at that point, the average, angel ticket in Turkey was maybe $200,000-$300,000 per, round. And there was no VC again. And we said, we need to fill this gap. And that's how 212 idea came up. And as I mentioned, we launched end of 2011 and started investing in 2012.
Yeah. And I think that there's a great story around how you have both you as a firm and how the Turkish market has matured over that period. But before going into that, I think it's best that we just ask you to give us a rundown on 212. What are you investing in? What stage? What are you looking for? What are you definitely not looking for? Why are you built the way you are? We just spoke before about you're now doing Fund 3, announcing that together with this episode, and you have the belief that you need to grow in increments of 20. And there's also a story there, right?
So what we invest in is enterprise software mainly. We could look at early stage enterprise software companies with traction. So we need to see revenue in clients. The average ticket we write is about 1.5 to 2 million euros. We can go up to 5-6 million, but don't like to go below 1 million. The must-have for us is the international growth perspective. So even if they're not international, they need to have the ambition to go international. We look at Central Eastern Europe, Turkey, and the Middle East. And opportunistically, we look at the frontier markets as well as US and UK for startups that have been started by mainly the regional diaspora. So the entrepreneurs who left Central Eastern Europe, Turkey, or Middle East, immigrated to UK, US, Asia, whatever. And we try to be the first institutional ticket there. We don't look at B2C solutions that much because we got burned by in the first one we got burned by a lot of e-commerce companies, and we noticed that we were more stronger in hardcore, less sexy enterprise software companies coming from the region, testing locally, going globally. I know that's like the cliche that people say, but that's how we have been successful. Also in the second fund, we further fine-tuned that and saw that our existing team is also more able to help enterprise software companies. So I think the third fund will still focus on enterprise software companies going global.
I have to ask you something there because you said that you got a bit burned in Fund 1. And I don't want to know how you got burned. I want to know more like the learnings from that, of course, which you've shared a bit, but also how did those conversations with your LPs go, right? Around the learnings and how you've evolved from that. Because it's a great learning, right? But it's a tough conversation still, right?
It is, and it's beautiful how much the brain forgets. And that's the best part. So I don't remember most of the conversations. Imagine this. When we raised our first fund, it was mainly high net worth individuals who never invested anything in technology, let alone startup, let alone venture capital, right? So the conversation would start with what is venture capital? Is there technology in Turkey? What do you mean? Like, 2 out of 10 might be successful and 8 will go bust. That's why it took us 18 months actually to raise the first fund.
Yeah.
In our first fund, we had 12 companies, and as I mentioned, 4 of them were in e-commerce, and we didn't do well, and they went bust in the first fund, and it was a tough time. I remember so we launched in 2012, and in 2014, I was really questioning life because we had to be generalists. We had to see what's out there, right? It's not like we followed someone else. We tried to, we wrote the first term sheet probably in a Turkish setting. We couldn't learn from someone else, so we had to go out there and create our own market, so to say, for venture capital investing in Turkey. And as I said, unfortunately, even though started by great founders, I would invest in, and I have invested in some of their startups, by the way, later than that, their follow-on startups. Unfortunately, they weren't successful in the e-commerce space. And as you mentioned, we had some difficult discussions with LPs who would call us and say, "Is all our money gone?" And I would say, "No. You have eight more companies. Don't worry. They are, up and coming. Don't worry. This is part of our business." But it is actually, when you look at the venture capital business and compare it to the offline and the real world, it's a very different mentality, right? Not that there aren't that many people who believe in the portfolio theory, who say, "I'm going to invest in 10 to 20 startups. 20% of them will, do great, and 80% might not make it." It's not a very natural response you get from most investors, right?
I would actually say that. So I've been part of fundraisers where it was definitely also that conversation with LPs. It was almost like you didn't want to show the portfolio model because then you're just going to have a long discussion about the fundamentals of venture, really. But they're looking at it and thinking that you're the crazy guy. And you're like, no, there's a whole industry that does it like this.
But don't forget, when you do it in a country, an emerging market, where people double their money in real estate every year.
Yeah.
So real estate double every year, which is not the case any longer, but it was the case back in 2011, 2012. So the conversation you have is, so the one LP I remember, potential LP, he didn't end up investing, is, so you say, I said, I'm going to invest in 10, hopefully 3 will make it, or 4. And he asked me, so why do you invest in the remaining 7 then?
Yeah.
So that was the level of discussion we had to have back in the day in 2011.
Yeah. And that was actually because of where I was going with my story was, if you were to say anything on that, because I'm sure you're still having those conversations sometimes with LPs that haven't done the asset class before, what would you say is the best trick to get them understanding what this is about? What have you seen have worked with LPs that haven't been used to the asset class?
First of all, maybe it's my background in banking in the US. I'm not overly optimistic about the asset class. I don't try to win every LP.
Yeah.
It's okay that some stay out.
Yeah.
I don't think VC is a business that everyone should be investing in. The second thing is, I mean, one of the first questions I asked them, which some people don't want to answer, is how much money they have and how much they might want to allocate. And I then take them through, portfolio model. I ask them how much cash they have, how much they keep in bonds versus stocks versus gold versus, blockchain. So I try to understand the sophistication of the LP and their risk appetite. So if they are really at the beginning of the, cycle, I'm not the right person to, take their money, by the way. And then what we do is, once we see that they might be a potential LP for us, we go to the portfolio model, and I usually take them through Harvard. So I take them through the Harvard endowment, right? And I show them, this is how much Harvard allocates every year to private equity and VC year over year. And you should probably allocate a small portion of your portfolio to VC as well. And guess what? I'm the first fund in Turkey. I'm the first fund to raise this second fund in Turkey. And I'm trying to be the first fund to raise this third fund in Turkey. And this is my background. This is my business partners, Numan's background. We were 2 people. Now we are 14. These are our exits. This is how much we return in our first fund. This is what we're expecting to do in our second fund. We would love you to be in. And it's okay if you don't join. Maybe you'll join the fourth one. I don't look at VC as a transactional business on both sides for entrepreneurs or LPs when I speak to them, because I really think it's about relationship building. And I always tell the entrepreneurs, investment is the last thing I will give you.
Yeah.
So I'll connect you with people. I'll help you out. I'm here if you want to have a drink or coffee and chat about something. And at some point, if you want me to be on board and if I want to join your company, I will invest in you. And again, that's how I look at life overall and the VC business that we are in. And it's the same thing with LPs. If they don't want to, invest currently, which is fine, they will get my updates quarterly. They will see who we are. They might co-invest later on, and they might be invested in the next fund. That's how I've been approaching it.
Yeah, I think that's a very healthy approach, and I think that there's many who should note this down.
So this is how I do it. I'm not sure if it's right, but
No, but it's a perfect point because one thing you're saying there is, as an example, I start by really understanding where they are in their journey. David just had literally before joining this call, he was texting me saying that I just sat through a 30-minute call where I think I spoke for 1 minute with a first time meeting with a GP, and it's like, well, that GP didn't learn much about what we would be looking for from him, and then he could have just sent us a movie, and then we would have known what he just said, right? So I think that there's. And of course, David sent me that because we thought it was not the smartest thing of that GP to do. And I think that everyone listening in here should take note of your approach. Think about how they do it themselves, right?
Especially in an emerging environment, right? We're not talking about a Western European or American case where people know what VC is. The amount of wealth accumulated is far beyond what we have here. So
but
it's
even,
a different
I would
market.
say, in every single ecosystem, I tend to find that VCs overestimate the sophistication of the LP landscape in the countries that are neighboring to them.
But that's why we exist.
Yeah, that's
right?
true. Yeah.
So, I mean, that's how you keep sane, right? When you will hear some questions that don't make any sense, and guess what? That's why you have a job.
Yeah.
Right? I always look at myself as a service provider, and since some people didn't have time to learn the business that we are in, we have a job.
Yeah.
That's how I look at it.
I love that. Okay, but then let's just get back to the part about 212 because now you are about to launch Fund 3. And I am very curious to hear if you would just say, but what's the difference between Fund 2 to Fund 3? Is it rinse and repeat, or is it are there adjustments being made? And if so, on what basis and what are they?
What's similar to Fund Two is similar check sizes. Again, I think initially we'll invest between 1.5 to 2 million euros, up to 5 to 7 million. Obviously, now a little higher. Again, the must-have will be international perspective. Even if it's an American company, I want to have an international perspective now because I've been burnt in the US by US only mentality. Obviously, going after amazing founder teams as always. I always tell my team, so we are 14 people, and most of us, including me, have never done VC before, right? And we've been doing it for 10 years. They ask me, so how do you know if it's the right entrepreneur? I always tell them, if you leave the meeting saying, I want to quit 212 and work for this guy, that's the person you want to invest in. So we are always after amazing entrepreneurs. So it's pretty much, what we've done in second fund and what's been successful in the first fund. One little addition to the second fund is looking at frontier markets more. So what we call frontier markets, it's Beidel, where Turkey is one as well, is like the likes of Bangladesh, Pakistan, India. We see some amazing entrepreneurs out there. So I think we will see whether we can add some value to some of the teams there to go beyond their countries of origin and go global.
Could you share an overview of the allocation per geo, and then share with us how you're thinking of navigating these frontier markets? Because it is challenging to build the connections, to build the deal flow. It's not something that you wake up this morning, I want to do frontier markets, and I'm amazing at it. Good luck, right? So share with us, how do you guys think about it, and how you're building or have been building up the machine to do that?
Sure. As I mentioned, Numan and I started this company for a long time. It was just two of us. Then Isabel, our CFO, joined us, and we couldn't afford her, so she was part-time. So it was 2.5 people for most of the first fund. Now we are close to 14 people. So the team is much bigger, and we have a very diverse team to support us. So that's been helping us. Regarding how we source deals outside of our region of comfort, so to say, we don't try to be the first or initial ticket in those regions. We co-invest with local investors or investors who have been exposed to the realities of that region before us. And again, just like the second fund, I like to invest once I see traction and I see clients I can talk to and the international aspiration. So we will come in once we see that my team would be able to help that startup founder team to go beyond. That's when we plan to be in. Again, the main focus will be Central Eastern Europe, Turkey, and the Middle East. So I would say 50 to 75% of our fund most likely would be allocated in this region where we have significant deal flow, close to 50 to 60 companies a week. So I think we will still look at this. But again, opportunistically, with co-investors, with other VC funds, I would like to look at the opportunities in the frontier markets as well, because I believe there are some amazing, I've seen some amazing founders out there. So I want to partner with them.
So I think for anyone like the three of us in this recording, right? We love venture. We love what we do. We're strong believers of venture. So we're like easy sells on the fact that there's great entrepreneurs everywhere. So I'm going to take that as a given. But where I may be like more kind of thinking in these frontier and emerging markets, sometimes the ecosystem itself is not super mature, right? So it might be where Turkey was when you started your firm, right? So finding co-investors is sometimes a pain, right? They don't really have a track record, or maybe there's only like angels in the ecosystem. Have you seen that? What struggles have you seen in trying to build these networks in these different emerging markets?
Well, surprisingly, when we look at in frontier markets, most of the big, European families and some of the VCs are there already. So we're not talking about this like, uncharted space that's out there. You don't know how to get there. There aren't even no flights there. You ride camels. And so that's how Turkey was, by the way, and still is to most of the international investors. That's not the case. It's already been, discovered, and significant investment is going in there already. So I think we are already past the starting stage there. We are at the second stage where startups ask you, which I love, the question that I love most: what do you offer that someone else doesn't? money is given, right? Everyone has money. I'm a very small fund. Most funds I compete with have a lot more money than I have. So what will you bring? That's like the challenging question. And they're at that stage. So that's why we are 14 people. If it was just about like deploying checks, right? I think 4 people would be enough. But it's
Yeah.
it's everything that's not out there, that's not as obvious. That's what I'm losing my sleep over and trying to build day in day out.
You have been through some time being founded in
Come on. I
2010.
know it's my beard is all white, but I'm not that old, by the way. So it's like,
I'm still ready to bet that you're older than me, though.
thank you.
At least you're not bald.
Yeah,
though,
well,
so
There you go.
you got that going.
you can always correct that after this episode if you realize how
I,
sexy.
I will. I'll try. I have an option at least. You see?
Yeah, you do.
There you go.
Huge optionality.
That's the luxury. That's the luxury.
Right? Your face is like a venture capital fund, full of optionality.
Thank you. Thank you.
So
You should Google me. You won't believe all the pictures there is on online. You won't believe it's the same guy.
I love that. I love that. So I will also share the photo of me being at a demo about squatting in socialist Denmark. So
Nice.
I have images that is also maybe difficult to see. It's me. But Ali, what I wanted to ask you was, we've gone through a cycle now that has definitely surprised some, even though we all kind of kept saying that it's going to come, but everyone also seemed to not really notice after all. I'm curious to hear your reflections on the last 2 years and what you're planning to do going forward. And I'm sure you've also now that you've been through your fundraise, have had LPs that committed and then coming back and saying, "Hey, Ali, I'm not sure whether this venture capital is really such a good idea." How have you responded to this?
I mean, the last 10 years for us at least, right? When you think about the things that we have been through, and again, don't think I'm complaining. I'm actually all these things are the reason I exist. That's how I look at it. But just to give you an example, and most European VCs or American VCs wouldn't think of these things. But when we launched our first fund, right, $1, American US dollar was equal to 1.7 Turkish lira. Today it's 19, 10 years later. And that wasn't the only thing. We have triple digit inflation. We had a coup. We had multiple bombings, Ukrainian war. I don't even remember. We shot down a couple of planes from Russia. So, many things happened in this region and Turkey itself in the last 10 years that would have crumbled any Western or Western economy, and we are still here. When I look at the last 10 years and look at what our entrepreneurs achieved, and again, it's them achieving, us helping, us serving, really. That's how I look at myself. I think it's amazing what the Turkish, and again, not just the Turkish, but the emerging markets entrepreneurs can achieve, because they've honed their skills with no availability of money, resources, mentorship, serial entrepreneurs, which is everything that you can find in the developed markets. So when I look at the last 2 years, obviously 2022 was a crazy year. It was right after Corona. The inflation wasn't still here with us. Everyone knew it was coming, and when I looked at the multiples, right? We all did. Now, I'm an old banker, and I mean, sales multiple, right? The notion of a sales multiple, let alone the notion of a sales multiple 3 years down the line, right? 2024 multiple, and based on that, coming up with a 2022 multiple and valuation is still crazy to me. And I think the rest of the world kind of just came to a more normal level, and surprise, surprise, we never were there. So the emerging market multiples and the valuations were never there. So I believe most of the emerging market entrepreneurs are suffering less on the valuation side than their Western counterparts. So that's on the positive side. On the negative side, unfortunately, there's still this overhang, and most international investors don't want to touch or don't want to take the risk of emerging markets. And that's why we exist, because we try to bridge the gap, right? We try to show them, hey, we are here, local investors. We'll do the initial ticket. We'll do the Series A together with you. And guess what? We have a counterpart in this part of the world where you can feel secure with, and let's get this down together, just like what we have done in the past two funds. So a very long answer to your good question.
It is a question that grants a long answer. And Ali, I must say you are very quotable. We have a lot of cool quotes for our announcing of this episode. Thank you for that.
Now, I just wanted to ask one final question, and that is
Please
because
do.
our good friend Enes Holy, he has
This
for
is
me
something you should not say publicly.
that
You should
that he
not say I'm good friend with Enis
who
in
we're also
Turkey,
investing
in
in.
surrounding region. I warn everyone about this between you and I. I'm joking, and it's a great guy. I have all the respect and love for him.
No, it's a good point. It's a good point. No, I wanted to say that he has come quite known to say Europe is Turkey or Turkey is Europe. Stop saying anything else. And I just literally, while we were talking here about geopolitical risk and everything, and then I googled, is Turkey MENA or Europe? And then of course, there's MENAT that which explicitly includes Turkey, but there's not Europe, where you then specifically include Turkey in Europe. I would love your take on that. How do you, both as an individual but also as a firm, think about Europe and your connection to Europe and MENA and all the different ecosystems that you're basically right in the middle of?
When I look at the technology space, right, I look at it as a Olympics.
Yeah.
There is no local competition. There is no regional competition. It's only a global competition. So anyone from Turkey, from Europe, from US, Asia, frontier markets needs to be global. Whether Turkey is Europe or not is not really relevant. What's relevant is what's important is that any entrepreneur and any serving VC has to have a global mindset. That's how I look at it.
And you're also thinking like that when it comes to your own investment strategy. So you'd
100%. Because the reason is, again, my LPs think that way. My LPs do not just look at Turkey and say, oh, Turkey is a great country, da 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 da. Let me invest in Turkey. They compare Turkey to Brazil, to Latin America, to frontier markets, to Eastern European markets, to Egypt, to Saudi, to Dubai. So that's the competition I have,
But
right? And that's why I invest that way too.
but at the same time, you're also being picked because you're the one with, in their mind, the best access and the best ability to help the
Yeah, well, but I
entrepreneurs.
need to showcase. I want to demonstrate this. If you want an exposure to this part of the world,
Mhm.
I am not the, but one of the
Yeah,
VCs you should have exposure to because of all these reasons.
yeah.
Usually, like, I mean, I was on a phone with an American LP the other day, and they said, should I invest in you or in it? And I said, you should invest in both of us because, again, if I believe in the diversification theory, in portfolio theory, which I strongly do, I don't think it's about choosing the right VC. Just like we don't choose a company, we build a portfolio. I think any good LP needs to diversify its VC base as well, as long as they see the story and the potential in a certain area.
Actually, absolutely agree there that are multiple VC winners in each market. It's very rarely one. So once you have figured out these are the three best, typically given venture returns and the dispersion of it, you'd probably do better by splitting your LP ticket than putting it in the one that you think is marginally better than the other.
Exactly. I mean, it's when you look at the success stories, and it's still early days, right? If I was an LP, and I am an LP now in some funds, I love distributing to different managers, and hopefully partake in the follow-on rounds. I use them as my scouts, right? That's what I would do.
I couldn't agree more with that. And I'm curious, actually, because you now said you use them as your scouts. And that is obviously part of our whole model of believing that we should connect the ecosystem more and more, especially, or in our case, through LP investments. But I'd love to hear how you think through that and also what you look for then in the managers and how you source them in quotation marks, because it's obviously not as big a thing as sourcing startups. But I'm also curious how you think about that.
It's similar to venture funding. And obviously, I mean, you guys are investors, and the favorite question is, what do you look for when you invest in a startup? When I look for is, I always try to imagine a table, and I try to imagine who's sitting around the table and how many seats are empty. So, are the founders here? Are the co-founders here? What do they give up? What's the opportunity cost? Who are the early employees in this company? What do they give up? Who are the angels? Who are the customers? Why did they choose them, i.e., invest in them? So I actually don't look for an investment. I look for co-investors. That's what I do. And the question for me is, do I want to co-invest with this bunch? Are they good investors? So same with GPs, right? I look at them. How much are they investing? What's the background? What do they give up? And do I want to co-invest with these guys or girls? I'm a lazy guy. It's a very simple question, but that's what I try to do. Looking for co-investors.
I actually love that approach, and I've heard a similar one where you say that in the end, when you are looking into startup and considering investing, you might ask the question because many have more hiring experience than investing experience in the beginning. As an angel, you'd say, "Would I hire this person to do the job of building a startup?" Right? Because it's a different mindset. It's easier for most people to draw on their existing base for. Yeah, I love that perspective, and of course, it's super aligned with the way that we think, given that we are to a very large degree.
We should join hands. We think alike so
Yeah,
much.
but you just need to get yourself a shaver and take off that that beautiful head of hair. Then you can be my best friend.
I shaved once in the last 10 years, and that's the first time my wife saw me without a beard, and she asked me to grow a beard back right away.
Yeah.
So,
But so facial hair is not that much of a problem. It's more when you have something.
what's this one? Okay,
Yeah,
fine. I'll do that for you tomorrow.
Thank you. I think you would look like a real boss. David, take us to the quick fire.
I will certainly. Just to our listeners on the Andreas and Ali were riffing off a bit on diversification and how you should think about investing. We put out an amazing article on that recently on our website, so feel free to check it out, where we talk about different portfolio strategies and how returns are affected by whether or not you hit that true outlier, portfolio dynamics, all of that stuff. Juicy stuff for the ones that love. Ali, on that note, time for the quick fire. Are you ready for it? We'll ask you quick answer questions.
Go ahead.
First question of the quick fire round is, what areas, technologies, or sectors excite you the most, but that other people around you don't really feel that excited about?
I love technologies in Industrial 4.0. So going after long, heavy machinery, industry, industrial sectors with new technologies. Very hard to implement, sometimes government owned or regulated. So very hard to get in there. I love that slow process, regulated industries that most people don't want to touch. I like industries where people with a lot of grit go in there, long sales cycle, lots of negotiations. I love that.
Yet another topic to feed into your bromance with Andreas, because he also likes that space. So great to know. Second question, what are your top tips to emerging VCs who are now fundraising for their funds?
I've been doing this for 11 years. I've done many mistakes, and we were lucky in some decisions, and I'm happy about what we've achieved so far. The number one thing has to be what I just spoke about a bit earlier. VC is an amazing and great business. It's not transactional. It's not about one investment. It's about being out there day in, day out, helping the entrepreneurs and the LPs. At the end of the day, it's a service business. It doesn't look like it from the outside. It's very much a service business. So it does require a lot of stamina. That's what I would say. It's not transactional. Be in front of entrepreneurs. Help them with everything that you can. It doesn't have to be money. Money can be solved. But having the support of a VC means a lot, especially in emerging markets. And if you can, add some money to it, it's beautiful. But money is secondary.
Third and final question, Ali, is what is the most counterintuitive thing you've learned in venture so far?
Venture capital is not about investing. It's about what you do afterwards, the day after. You invest in these people, which I think is beautiful. It's a great sport, and it justifies your seat at the table. But it's the day after where you really, get your sleeves up, roll your sleeves, and start doing the grunt work. That's why we exist. From the outside, it looks like an investment class. It's an asset class. It's not. It's about HR. It's about people. It's about psychology. It's about everything you cannot put on Excel. And that was the big learning for me. And I love Excel. When I want to think about something, I usually put it on Excel. That was my big challenge. It's about people, everything that you would never think you would have to think about. And there's a lot of things in there. That's what venture capital is. It's not about money. It's not about investment. It's about people.
You said you love Excel. I can't help but think think back to a mentor of mine who, even when he wrote up agendas for a meeting, he would put it in Excel and send it to me in an Excel file. I was like, who the fuck writes a...
When I'm stressed out, I put some numbers in Excel and start calculating, without a reason, right? So I write some formulas I used to know from my banking days. But again, think about this. When you're a VC investor, you get a call from one of your entrepreneurs on a Saturday night, 12 o'clock at night, saying, "Hey, my wife is divorcing me. What do you want me to do?"
Yeah, count it in
You
Excel.
don't do this as a banker.
Yeah.
Or someone calls you, "I have a health problem. I need to get an operation tomorrow. Should I tell my employees?" 9 out of 10, it's these questions that you deal with, the human part of a business that most people do not see, which is beautiful because you are partners with them. But it's also a lot of responsibility. It's not like a banking or consulting or private equity job where you meet like once a quarter or whatever, look at the numbers and say, okay, until next. It's the human part is the most important differentiating factor of the VC business. And I think most people underestimate that part.
Yeah, couldn't agree more. And then especially, you investing in Industry 4.0 and loving that space, that's definitely something that is lacking typically both on the founder side, but also in more of the more technical VCs. So I imagine that's fish in water for you. Ali, thanks a million for joining us for this. It was super cool.
Thank you. This was fun. So when am I shaving? Am I shaving tomorrow? When are we going to be best friends?
Either
You can shave on camera, so we can.
if you wouldn't mind doing that, then we will do a snippet on the back of this then and get it really, really great, and then we'll have that actually playing in the same time. That would be so cool.
Very easy. It takes 2 minutes. I do it every 2 weeks.
Yeah, exactly. That would be great. Just film it next time, then shoot it to us, then we'll put together a video back on that. That would be awesome.
Thank you for listening to this episode of the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc.